For me, everything is all about the lifestyle. And, that's what you live for, is your life. I don't live for my Bitcoin. The Bitcoin creates my life. My opinions are, in life, have cash flow, and then own Bitcoin. First thing is invest in yourselves. You create a business. It's a high margin business. It generates an income. It affords you the opportunities to make investments and have a lifestyle, right? That's all that matters. There's a reflexive loop that's going to happen. It's so obvious. Is the US has approved custody of Bitcoin for certain banks, which is a code word for prime broking for hedge funds, which means the hedge funds will see this. Most of them haven't got custody yet, but soon they will. And that means that they will come into this space because they can trade multi-asset class. So that sucks them in. And I've talked about this. The next is the ETF will get launched at some point. Somebody will get it off the ground. And then all the RIAs buy it for their customers because it's outperforming everything and they love to be cheap and chase the trade. So this is going to be the strongest trade now. So you've got the hedge funds and the RIAs. We know the family office space is already interested and they get sucked in the more the price goes up and the narrative goes up and more people talk about it. Family offices tend to do that. Endowment level are next because they can hold it as a long-term asset. So endowments can justify it earlier than pension funds can. Pension funds can't do this yet. It's quite difficult for them. So we've got this wall of money that I keep talking about that's coming. And if you throw in the public and the NASDAQ traders and the speculators and the Robin Hooders and everybody else, you've got a perfect storm. And you've got the corporate treasurers. Unfortunately, and I've talked about this a few times recently, the crypto space is not very good at speaking the language of others. We tend to impose our own language. So the corporate treasurers will not buy Michael Saylor's language because it's not the language that they speak. They don't think in those terms. Yeah. Corporate treasurer may stay at Microsoft for 10 years and then leave. He doesn't think in the same, it wasn't his company, he didn't build it. So we need to talk about how it works as a diversified asset, how it works in a corporate treasury portfolio, fixed income, commercial paper, currency baskets, all of the things that they do. We need to talk that language and show them. Once you do that, Microsoft and Apple and all these other massive cash businesses will own it. Of course they will, because it's a great asset for diversification and they don't need to buy too much of it. But I kind of think I know how to value Bitcoin, which is it's a reserve asset with a call attached. On the future financial system, we talked about opting into a parallel system. Well, one's being built. So what value is that worth? Well, that's worth a lot. So I think I can get a macro valuation. I can't for Apple. I can't get $1 trillion company and figure out, is it worth 3 trillion? I just can't do that. And that's just probably because I'm stupid, but I just don't know how to do it. So I just stay away from it. And I put out a tweet thread today that I've now can't even use my Twitter. It's kind of overwhelmed with this thread showing Bitcoin versus every other major asset, including Amazon and Apple, right? They're all breaking down versus Bitcoin. Look, I've been in this game a long time. I've also studied history. I have never seen an entire asset consume every single other asset in the world. I mean, it's extraordinary. And I think this is just the start, right? The charts I started with is, okay, what does gold look like versus Bitcoin? Well, gold is breaking down versus Bitcoin. Then what does the NASDAQ look like? Because surely the NASDAQ must be outperforming. No, it's breaking down. What about the banks? Well, the banks, we've always talked about that Bitcoin's destroying the banks. Well, the banks are at all-time lows in Bitcoin price, using Bitcoin as the denominator. What about commodities? Well, if you use Bitcoin as the denominator, commodities are at all-time lows. What about Apple, Amazon, the G4 central bank balance sheets? That's been the most powerful asset in the world. No, Bitcoin's eating them all. So Bitcoin is becoming the world's strongest narrative, and it's only just started. The pension system, okay, that's another beast. Again, everyone's like, they should do this. Well, until you can show it to them in Barra models. Barra is the model by which most of the pension industry builds their portfolio and risk management tools. But we're not talking that language. So it's like you shouting at me in French and me just shouting back in English louder, saying, I can't understand you. That's what's going on because they can't do anything with this. They've got a bearer asset. They don't know how to custody, that we're not telling them how it works from a portfolio diversification or risk metrics standpoint. We'll get there. And I've already been starting to beg people who understand the barrow world to say, listen. And now who owns that pension fund asset allocation world is consultants like Mercer. We need to get them across the line. You need to teach them about it first. Then they go to the pension fund trustees, and then the pension fund trustees approve it for the asset allocators. That's a big process. The brave go first. I mean, good on him, right? Because he was in a position that he could, and he got it. And there's a few other people around that got it. But that will spread slowly, but it will come. Because I know everybody's going to hate this, but the investment banks will get into this space, and they know how to translate. They know how to speak to these other people. That's a net beneficiary to the space, even though all of us want to protect it from the investment banks. But they can't screw with it, really, because it's distributed, it's not owned by them, nothing they can do with it. They can help create a derivative market around it, but that's coming anyway. There's nothing we can do to stop it because humans want leverage for some reason.
That didn't catch the valuations. Raoul Pal has a $50,000 Bitcoin price prediction for March, as you can see, and he has a longer-term $1 million price prediction for 2025.
The dirty secret is most of these guys held it in their own PA accounts because they can see it, right? They just weren't able to put it in their funds.
What do you think when you hear this kind of sentiment being pushed around that this time is different because we do have this big money coming in, there won't be some dramatic bear market and stuff?
I think gigantically different. Firstly, look at the acceleration of this post-halving versus the previous one. It's faster, which none of us expected, right? We were all expecting the slope to be less. So far, not true. That's just, it's early days. So that's interesting to me. Also, the structure of the market before was retail investors. Now, here we've got institutions, some of them will buy and hold, but as you bring in hedge funds, you'll start bringing in new supply into the market because they trade it more, and they'll trade it in big size. They'll be selling some, buying it back, selling some, getting short. That's a different structure than we used to. What that actually does is lower the volatility of Bitcoin over time. So the texture and feel of Bitcoin will be different. Over time, the next cycle, the returns will be significantly lower in terms of percentage returns. This one, I have a hunch that this will be bigger than anybody imagines. Everyone's like, well, plan B, he's got 250,000 or 280,000. Others have got various levels between 50 and 150. But if I just take the log chart, put regression lines on it, if it gets to 2 standard deviations overbought, which is roughly where it got to the last 2 peaks, that's $1 million. Is that's doable? Big. I don't know, but what I do know is when you're forcing an elephant into the bathtub, things are going to change, right? And that's what we're doing here. We've got no supply. We've got this kind of industrial vacuum cleaner of Bitcoin coming in, which is the institutional space. But it will structurally change it. We will see weird things like quarter-end markups or markdowns. We will see rebalancing. We will see all of these things that we've not seen before because it's not been a feature of the retail investor. So the structure of the market is changing, but I have a feeling that this is going to be a little more shocking than people imagine.
Wow, that's a big call, $1 million Bitcoin. And it's obviously a number we've thrown around on the channel before, and it's crazy to actually think about it because I feel like a lot of investors, they struggle seeing this big picture kind of playing out, where if you go back a few years when Bitcoin was $1,000, nobody could have imagined it going to $20,000, but now here we are at, $20,000+, whatever it happens to be at right now. The idea that we could see Bitcoin going to this crazy valuation, I mean, that's almost twice the market cap of gold if we get to $1 million.
Well, where's gold at that point? Gold has probably gone up significantly too. And again, the $1 million thing, that regression line, just means there is a probability. It's not really my forecast. I'm more comfortable saying, another 10x from here, 250,000, that kind of makes sense. All I'm saying is the probability to me is not an undershooting, it's actually an overshooting.
Interesting, very, very interesting. Now, you've got this incredible window into the world of these big money investors, right? You're on a first name basis with some, really incredible big money investors. So what are these guys saying behind closed doors about Bitcoin? I know we've had some big announcements this year from Paul Tudor Jones and stuff, but what are they kind of saying, behind closed doors? What are they kind of thinking about Bitcoin right now?
Well, the dirty secret is most of these guys held it in their own PA accounts because they can see it, right? They just weren't able to put it in their funds. The structure wasn't there. The futures, that helps. But some of them want to physically store it. They want a custody. They want it in their prime broking accounts, and it doesn't yet fit in. But that's changing. So they are all working on it. I'm also hearing incredible stories of these massive hedge fund platforms trying to buy every single independent crypto hedge fund to add it to their platform.